All right, well, g'day there, everybody. Thanks a lot for joining me in this weekend market address. It has been another, relatively speaking, bullish week, I guess you could say, really outside of Monday's candle, whereby most of the bullish action did take place and did actually propagate and push these markets further into positive territory. Really, Tuesday through Friday, however, it was a little bit of a different picture. Markets considerably did slow down. This is a chart of the S&P 500. A little bearish candlestick just here on Tuesday, but really Wednesday through Friday, again, you can see the continuation of this sort of sideways move, albeit temporary. Again, these divergences are continuing to form. Have a look at this. If I show you this on the S&P 500, we do have an upper high now, at least a higher high in the month of February relative to where we have been in the period of January over here. This is where it really becomes concerning. If you have a look at this on the oscillating indicators, the MACD struggling to actually reclaim its higher high, or at least its relative high back in the period of January. Again, on the RSI, you can see this extended divergence taking place. The stochastics is back on up into overbought territory. It really becomes a little bit scary. Pardon me when I bring it up on the Dow Jones Transportational Average. Take a look at this. You can see the considerable slope, or at least the movement off from the highs back in the period of January. If you really want to make it considerably even more scary, and if you go back to the period of November and then you even discount into the fact that we made a higher high in the period of January relative to where we were in November of 2019, and then of course where even we are at the current juncture, in the period of February, you can just see that we've got a multi-month negative divergence shaping up on the transportational average. Now I understand, and this is a really good segue, by the way. If you're listening to this discussion here on YouTube at this particular point, and again, I've just chosen to go off on a tangent right now because I'm moving back into Dow theory. We had a really powerful discussion on Dow theory and also decelerating fan lines and where we are exactly in the macro backdrop of this economic expansion that we've been in since the beginning of March 2009 in last weekend's Pivot Point Pro analysis class. Here we are. Today's date is the 15th of February 2020, last Saturday. Now this class is up on the website. It is ready to go. If you go back the first, I'd say 45 minutes of that 90-minute presentation was all about the macro backdrop, where we are exactly in this economic and business cycle. What we did also was interrelate that back into, I guess, the economic metrics that I think are most valuable and things to keep your eye on as we push further into 2020. One of those, of course, is Dow theory confirmation that we simply do not have with the Dow Jones Transportational Average in combination and in conjunction with the industrial average. But really, some of the big, powerful things to take away are these decelerating fan lines, not only on the transportational average, but also, if I bring this up into the Russell, right, 2000, these four lines on my screen and what they mean for the financial markets, right, at the current juncture, and also where we are right at this particular location here on the Russell 2000 is critical. Very, very critical. Now, again, I would encourage you, that recording is up on the website now. In fact, all of those recordings, really going back even through 2019, are up on the website. Earlier today, or at least a couple of hours ago now, I actually sat down and did today's recording. Okay, this weekend's recording, going over a little bit of what we spoke about last week, but really the major power was in that first 45 minutes of last week. I can't sit down and do that every week. We did go, of course, into or over the markets this week in our top 12 individual trade list. A couple of things to point out, and again, this is the reason why I'm sitting here to do a second sort of recording of today anyway. One private at this point for pro members, and also one here publicly speaking, is that we came across a prevailing narrative, a theme, which is not only setting up on, say, the Dow Jones, the S&P, to a lesser extent the NASDAQ, but also this translates and transcends into a bunch of individual companies. What we have is a criteria. Now, if you've been listening to this public resource, okay, you understand that we are on a macro time frame. We're very optimistic still for the 2020 calendar year. We've been very optimistic for the entirety of 2019. That proved to be tremendously profitable and successful and correct. However, really since the beginning of 2020, we have been largely cautious, and although we haven't been executing, say, bearish positions, we have been very much defensively operating in terms of our mindset. Now, what we have through, or at least from, I'd say the second week of January through to where we are in February, is now a mix of fractals or layers, pressure points in the marketplace, and also individual stocks, whereby the perimeters or the structures of those stocks are now aligning off from some of the price action that we saw last week, whereby if we see some of these critical areas, and I'm speaking a little bit of, it's not applicable to specific stocks on the markets, but that's the benefit anyway of Pro. But if we start to see some of these areas flinch, these pressure points on the markets and individual companies begin to move below pressure point, you're going to see just complete capitulation. Now, again, it's just words until this happens, but there are a lot of reasons, again, to be looking at this market, appreciating it for what it is in terms of the public sentiment, and again, the prevailing sort of psychology, a little bit of mania right now as to what's simply going on in the equity markets, and that's fine. That is one thing, but it's also a second thing, or another thing, to be objective about it. We've remained objective in this analysis, the application of that to the financial markets, and really last week in particular, the week just gone. Obviously, I wasn't all that, present on the airwaves. The prior week, I think we maybe put out 3, if not 4 public recordings. The week just gone, really it was just Thursday where I sat down, or sorry, as at the conclusion of business, I think on Wednesday where I sat down, because really the actual change or the lack thereof, it just wasn't really prevalent whatsoever from that Saturday class. Saturday's class had a tremendous amount of value in it. And what you'll often find is that sometimes the markets themselves, they move tremendously slow. And if you have a look at this and think about the context of the market, Monday we got the outside day engulfing candle, and then since then the market's moved sideways. If you have a look at the Dow Jones Industrial Average, you've got the Monday's candlestick, it popped, and then we're pretty much moving sideways Wednesday through Friday. Very quickly, maybe setting up a bull flag on the Dow to move to higher prices. On the S&P 500, we've got that stair step. But again, you can begin to see the pressure points on these two markets. I'm not going to say where they are, but I would encourage you to have a look into the explanation as to why they are placed where they are. Because if we see a legitimate reversal from this area very close, it's going to be an absolute free-for-all on the downside. It's going to hit this market very quickly, very hard. It's going to blindside a lot of people, which I'm concerned about. If I go out into the weekly time frame of the S&P 500, you can just see how stretched we are. In fact, if you go back out and have a look at this, we're above where we were at the beginning of 2018. And also, obviously, where we were into the Q4 point of 2018 as we transitioned into 2019 on the monthly time frame. Have a look at this. With some, I made the point in the comment of this, is that with some point right now in a mix between that of the dot-com bubble and also the period in time in 2008, whereby we started to see the macro oscillators definitively shift down. And the reason I say that is because when you zoom on into this picture, it looked as if we were developing divergence, so to speak, on the monthly time frame. That's sort of been wiped aside. However, again, it doesn't take away from the fact that when this crosses down, again, I'm anticipating this in 21, it's mixed with a bunch of other things that we spoke about last week. It's going to be a complete macro top on the market. The Nasdaq is pushing back up again, taking away from the potential divergence. Dow Jones, it still hasn't achieved the same, but ultimately that is going to follow suit as well. But there's a lot of analysis that I think a lot of people would appreciate if they took the time to look into it. So again, themes this weekend, pressure points across the board on the markets, individual companies revealed in that class. Have a look into it if you've got a spare moment. It is a long weekend, obviously, in America. Monday, it is Washington's birthday. The markets will be closed in observance of that. So we are looking at an abbreviated week's worth of trade, Tuesday through Friday. Outside of that, everyone, I wish you all a very enjoyable weekend. I really do. Personally, I'm down at the coast at the moment, about an hour south of Brisbane, place called Kingscliff, which is really nice. Finally, the rain has sort of cleared up, the sun's out, so I'm going to head to the beach go back down to the beach, I should say. But enjoy your weekend. I hope it's relatively warm for my Northern Hemispherian friends, Canadians, Americans, Europeans. But again, we are moving into an abbreviated week's worth of trade. If you're fortunate enough to have a long weekend, enjoy that as well. I'm going to say farewell. If you have any questions, email me, success@pivotpoint-trading.com. It's James signing off on behalf of Pivot Point Trading. Farewell.